This is the review for the closing of the market today. Today we have again negative market with the QQQ minus 126, the Nasdaq 100 down, and the S&P 500 minus 0.50. You get TLT that has been quite good today with 1.72 up on the upside. Obviously people are running for safety. And you get IWM that is quite resisting the lower band of the 215 like we talked yesterday, and so far they are defending that ascending channel, so far it doesn't really break down to the 210 level. So IWM with minus 38%. So let's go into the detail of the QQQ. So what we can notice on the QQQ is that we have actually retraced back to the level of the upper level of the bull flag. So this is basically the 510 level that I've just traced here. And I would say that the RSI is about 40, so it's going to go on the bearish side. And you can see that the volume has been quite high during this day. So it seems like the bearish sentiment and the selling pressure is quite high at the moment. But it's not very dramatic because it seems like a lot more. But so far the market has just pulled back. I mean 6% or 5% at the close of today market. I mean 5% is not dramatic, huh? 5%. I mean in the stock market this is nothing. So if you're afraid of 5% pullback since the all-time high that we reach on the 20th of February, then I mean this job is not for you, huh? This investing in the stock market is not for you. So let's now talk about the S&P 500. S&P 500 has been modestly down today. It seems to be reaching exactly the same level as QQQ, the upper limit of this bull on the bull flag. I mean the failed bull flag, because now we have retraced back to that level, and you can see that from the all-time high we have pulled back only 3%, and when we actually rebounded from it was about 4%. So today we are minus 3% from the all-time high. So definitely the bull market is not dead and it's not over. I mean a retracement of 3% is nothing. This is just normal volatility level. So don't panic. I mean, we are just zoom out and see exactly where we stand. We stand at 3% of the all-time high after a massive run-up. So this pullback is normal. 3% pullback, this is nothing. I hope that it goes even higher than 3% pullback so I can buy more. My ideal pullback level would be 575. 575. This is about a pullback of about 6%, which is not dramatic, but at least it can get a lot of steam out of the market, a lot of pressure out of the market. You can see that the RSI is still reaching one of the lowest level since 2024, about 40. And let's see if it will continue to go down like in August. But remember, when we were in August and the RSI just touched the 30, that was exactly the level of the lowest point, and this is exactly that moment when the market rebounded sharply. And you see that the market corrected for about 10%, and from the lowest point of the RSI, and usually this is a clear indicator the market will rebound, because here we can see in April 2024 again there were a correction, and when the RSI touched the 30, then the market rebounded very sharply. So again, we are not reaching the 30 level, but I think if we have still further downside to go, I will welcome more downside. So then we can continue the rally on the upside without fearing all the time that there's been too much pressure in the market, too much this, too much that. So it's better to let some steam off. If we talk about the IWM, we touched on it. It defended its lower limit of the uptrend channel that you can see in the yellow line. And this is quite disappointing because you would think that all the money that is going out from the QQQ and the SPY is going into the small cap, but actually that's not the case. The money is not going into small cap. I see a lot of comments online that is a rotation into defensive and small cap, which is not at all the case. Small cap is not benefiting from this pullback. Now, if we look at TLT, that's the 20 years Treasury fund ETF. You can see that there's been a sharp rally since the lowest. There's been a rally of about 7%, and that's pretty normal because I don't think the rate is going down for whatever reason. It's just going down, but the markets rally because this is a defensive play. Again, people are going for defensive play. That's what we can see also from the sector point of view. On the sector point of view, you can see that material has been up, industrial has been up, consumer staple, real estates, and healthcare. So all are defensive play or non-cyclical play. So basically, all the more growth-oriented sectors and more cyclical sectors has been all down today. The VIX has continued its course to the 20 limits. You can see it touched today 2022 and it's let off some steam going back to 19.53. And you can see this is the level we reached the last few times when we corrected, and there's nothing out of normal. You can see 1, 2, 3, 4. My ideal situation would be that the VIX would touch the 23.33. You can see it touched it one time here, one time here, one time here, another time here, and it just slightly touched here. But I think definitely a buying signal for the S&P 500 is when it touched 23 level. The one we see, the huge peak that we see in August 2024 was the unwind of the carry trade. This is pretty much exceptional. I don't think we're going to see that again, because that was one of the highest level of the VIX since many decades, and this is out of normal. So you would say that targeting a VIX of 23.5, this is a good moment for us to start to enter the market again and start to DCA. So dollar cost averaging for your existing position. This is quite important because usually when the VIX is really high or reach that level, that means that the market is bottoming out, and the market will continue its rally. So from a company specific, you can see AMD is continuing its way down. I'm invested quite heavily in AMD. I think the stock cannot check out its negative market sentiment because all the fundamentals are quite good for this company. But don't worry again. I'm heavily invested. I'm losing quite a lot of money on AMD, but I don't care because I think that over the next 5 years, we're gonna double or triple or even quadruple this money. So AMD definitely, this is an anomaly, the same way that we saw back in 2022 for Meta and for other companies. Definitely this is a good time to buy AMD. Fundamentally speaking, it's very strong, so let's not really worry about that. So if you are really long-term focused, this is not the type of company that you should be worried about. A strong balance sheet, strong cash flow, strong product, a good tailwind trend because of AI, and then tomorrow you get the NVDA earnings, so maybe this stock will move together with NVDA and with the market. But we're gonna touch NVDA. NVDA is having its earning tomorrow. That's gonna be a big day for the market. Today the stock retraced back to this 200 moving average. That's not a coincidence, because you see last time it touched always the descending, it touched last time again the 200 moving average. This time it touched again the 2 moving average, and it's on the lower band of the channel that it's been trading sideways really since about October 2024. So it's been a long time that NVDA is trading between 150 and 125, 130. So tomorrow you would expect a good earning. I mean, estimate is 0.8 cent per share, and estimate revenue is 38.1 billion of sales. I think that the market will beat the estimate for sure, because it always beat. I mean, you look at the earnings from the previous quarter, you can see it's all green. So it depends of whether the market will be happy with the forecast and the expectation or the comment during the calls. So I will attend the call tomorrow, and we'll try to make a bit summary on a specific video later on today. Not tomorrow, after the market close. So one company we can talk about is Tesla. Tesla again has lost minus 9% today. You can see from the all-time high, it went down more or less by 40%. That's why you cannot really chase a company that is being pumped like hell, where actually fundamentally nothing has really changed. I mean, if you look at when the pump has started, it was November 24. Nothing has really changed in November 24 to today, and it pumped really because the momentum was behind the company stock price, and everybody was trying to pump the stock high. But those who actually were believing this is a long-term trend and it's backed by strong fundamental were in for a big surprise, because now they've lost almost half of the money. That's why you have to always let the momentum play go alone. I mean, don't chase it. Even if you miss out, never mind. The FOMO is never a good idea for this type of stock. Just stick to the fundamental, stick to the overall market sentiment, and Tesla definitely not warrants to be on the 500 level. I mean, this is insane what you can see online, and all this video when it was reaching 500 they were talking about 1,700, and so this is always the same story. You cannot be led into the wrong judgment about a company because you see all these video online. I mean, that's a very bad thing to do. So when the market crash, they all think that it's gonna down to zero, and when the market boom like crazy, they all think that the stock is going to go to the moon. So be serious. Go and follow YouTubers who are very serious and very experienced about the market. There are a lot of people who are entertainers, but they are not investors. So I would say that the stock Tesla will go and retrace back to its 200 moving average. Is about it's around 280, and this is where I think a natural support level from the previous from the past. So I would say 280 is the target. So let's see if it goes there, but I believe it will go there. It will go to 280. Another thing we can look at is the MAX 7 index. The MAX 7 index is basically, you can see that it breached the 52 support mark that we talked in the previous video, and I told you that if it breaks the 52, the next support level is 50. 50 is a very, very strong natural support for the MAX 7, and if it reaches 50, then the MAX 7 would have lost 15%. 15%, it's a meaningful pullback for the MAX 7 in order for you to start to maybe DCA again. I mean, I wouldn't touch the MAX 7 right now because it breached the 52 support. And of course, it defended quite well that support today because it breached quite significantly. Then after that, it recovered almost to the level of 52. But I think when it's breached, you need to wait that it rebounds and it retest again and rebound again before investing again into the Max 7. So my idea is that the RSI is starting to reach the 30 level, and you can see the last time it did the 30 it rebounded. I mean, it's not a coincidence, it rebounded here, and again when it reached the 30 level of the RSI it rebounded again. So again, RSI it's not always a guarantee, but then when it reached the oversold level, then usually this is time for the stock to recover. It's not always the case, but it is usually the case. And you can see on the chart, it's quite obvious. I mean, you can see 1 time, 2 times, and I think we'll get it 3 times. If we go back to the past, maybe we got the same thing as well. So again, be patient. Don't jump into the Max 7 right now. So the next company we can talk about is SMCI. SMCI, I'm very disappointed. I actually closed all my position today after the opening of the market because we have no sign at all of the publishing of the 10K filing. And again, this is one of the mistakes that I've made because I doubled my investment when it reached 65, but I really believe the company was becoming more honest and more aware of the shareholders' interest, and they will not play with the nerves of the shareholders. But again, I was wrong. This company is not reliable and continue to be unreliable. I think that when you are in the situation like SMCI, you should make the utmost of your capability to even publish before the last minute of the deadline you have been given, so you can restore confidence of investor. But never mind, this is the way it is. So I actually closed the trade, but still at a 50% profit. But I could have made like close to 100% profit. But then anyway, it's still a good 50% profit, and you cannot relinquish this profit. I played well the trade. I managed my risk management. I actually cut 50% of my position when it reached the highest level of 65. But maybe next time for this type of high speculative trades, I will probably cut maybe 80% of the position when I think the high of the trade or my target is reached. Because you see this pullback, he raised almost a good third of my profit. Never mind. Palantir again is a down day. I mean, that's also one of the typical retail stock that I said to people not to chase. And what I discussed yesterday on my video is that it will touch the 55 moving average, and then if it's break the 55 moving average, then the 70 will be the next support level. Actually today it basically touched the 55 moving average and it's rebounded from that level. So you have to watch out. If it maintains that level of the 55 moving average, then it's good because you still have the support of institutional, and you can say that maybe the stock will oscillate on the sideway and maybe recover from there. But if it breaks the 55 on the next few days, then be careful. The next level will be 70. And then if it breaks again a 70, then you have to go back. It has to go back to the 200 moving average, which is about 50. I would say that if the price reach 50, this is a huge buying opportunity. Palantir, there is nothing wrong with the fundamental. But again, here we're talking about a company that is extremely overvalued. And you see all the YouTubers on Palantir, when it was reaching the price of 125, they were having like big clickbait headlines like 300, 400, 500, 1000. They follow us to invest at the whole time high, where we are talking about a company that's trading more than few hundred times of the earnings, and probably a huge amount of times about their sales. So if you take any valuation metrics, any fundamental metrics on the valuation side, this was screaming, be careful of the collapse of this stock, because it's a parabolic move every parabolic move of this magnitude always end up with a meaningful pullback or correction. And this is a meaningful correction. We have about 30% correction. Of course, the one who ride all the rise from the 20 to that level today, they're still in profit, right? They don't care too much. But that's the one who actually invested here. I mean, most people invested in 70. You can see on the volume here, most people invested at the 75 and the 25 limit, 25 level. So those who invest in 25, no big deal, right? They still have a meaningful profit. If they believe the long term of the company, they just stay. If you invested at 70, you already lost probably half of your profit. So you see what I mean? It really depends your entry point. But if you invested in 70 and you are in for the long term, just stick with your stock. But again, don't chase momentum. When the market sentiment shifts, this is the first stock that gets hammered by the market. So what we can also see is that the QQQ and QQQE, the QQQE is slightly outperforming the QQQ. So that means that again, the MAX 7 is underperforming the overall Nasdaq 100 because the MAX 7 has lost minus 2% today, and the Nasdaq 100 has lost minus 1.26%. But I think that it's quite good that the MAX 7 is actually pulling back meaningfully, and I hope it will go from 15% pullback to 20% pullback. It's the limit of the bear market territory, but I don't think we are entering a bear market for the MAX 7. But it's very good for the MAX 7 to be pulled back on the valuation to this level, so then the market rally can continue with a good base of valuation and reasonable valuation. So I think today is a very important day. This is the NVDA earning, and we all know that NVDA earning is going to give a clear direction of the market. If NVIDIA earnings are good, expectations are good, and guidance are good, and all the comments during the call are good, then you will see a massive rally in the market. This is for sure. But if this is the opposite, you can see a pullback, a meaningful pullback in the market again. So watch tomorrow the NVIDIA earnings. Don't put any chips tomorrow on the market. Just observe what is happening in the market, but don't speculate tomorrow. I mean, when you have big event like this, it's better to watch what will happen, and after that, you place your chips on the table when you know what actually happened, and you have a clear direction of where the market is going. I'm just having a look if there is anything else I can mention to you. Yeah, Bitcoin continue its way down, and MicroStrategy is also continuing its way down. MicroStrategy is another example of a momentum trade and of a speculative trade on the Bitcoin, and you can see it's already retraced more than 50%. So people who were thinking that it were going to the moon from the level of 127 to almost 500 in less than few months. I mean, you do a 5 times in less than few months. This is a huge, massive parabolic move. I mean, the one who haven't saw at the top thinking that we'll go to 1000, I think is very stupid. You get already 500% and you're not selling, taking a profit. I mean, the bag holders here, I can't even imagine how they're going to recover the money. It's going to take a long time before they recover the money. So I would say that the level of my MicroStrategy is going to reach the 200 moving average of 230. And from there, we will see if it's all the 200 moving average or it's just going to go back to the point of control, which is 167. but I do believe that it will hold the 200 moving average, which is about $230, and from there it will start to test that level for a while, and then after that start to recover. Be careful, because MicroStrategy is a stock and can move really, really fast, and I wouldn't advise anyone who is not used to the high volatility to invest in this company. Nothing really else to add. So what I would say is, be very careful. This market is nothing dramatic. The pullback on QQQ and SPY is quite reasonable. We are not reaching exceptional level of pullbacks. So don't panic. Max 7, yes, of course, there is a significant pullback. I mean, we are touching about 15% overall for the Max 7, and I hope that it will pull back to 20%. 20% is better than 15%. If you want to add into your portfolio, you don't want the stock to go up, you want the stock to go down. Of course, this is impacting your existing position. But what do you care if your existing position is impacted if you have a long-term view of your investment? If you want to go shopping, you want to be on sales. You don't want the price to double. You want the price to be 50% down. And you have to have this mindset. Pray for discount. So you can buy high quality company with good balance sheet, good cash flow, and good momentum, and good positioning, and everything for them at a discount price. So I wish you a very good evening, and see you to the next video. If you really like this market update, please subscribe to the channel, press on the like button so it can help the algorithm to I would say promote a bit more this young channel. And you can also subscribe to the channel to help also this channel. So this is a project that we do together. I'm not selling anything, I'm not asking you any money. This is just a subscribe and like button push. This is costing to nobody anything. So thank you so much, and have a good evening. Bye.